shake and
Dude, our whole intro just got cut off. It's insane.
I know. I was just saying that I love dancing as our stuff happens there in as our live music goes live because it sometimes I've been like hunched over my laptop, working feverishly all morning, and it's good to shake out the back a little bit. Ladies and gentlemen, my name is Judah.
Well, I'm sorry, I'm talking over you, but on that note, I got to get outtakes of those things because they would make that's great TV right there, buddy. Great TV.
That is great TV right there. The question of the day, ladies and gentlemen, that we want you to answer in the chat is this shirt acceptably retro? Is this sweater acceptably retro? Or does it need to find its way to the nearest Goodwill donation bin? Please let us know in the chat as we go throughout the show, whether you're watching live or they're watching in replay. My name is Judah Hoover.
I gotta. I mean, you're not giving me time to comment on these outrageous.
I was gonna finish introducing the show, and then we could comment on that. But go right ahead. My name is Judah Hoover. This is Josh Weidman over here. Somehow, where is he? There he is. And this is the Build and Grow with Real Estate Show. We come to you every day at noon, where if you are a realtor, if you are a lender, if you are an appraiser, if you are a title company, if you make your business as an investor or buy and hold, if you touch real estate and make money from it, this show is for you. It's certainly skewed very much towards realtors and real estate investors, but there's a number of ways that people can benefit from this show. And Josh and I are just two dudes who tell you what we think. I am an executive at a real estate company. I'm a realtor, list and buy and sell a whole bunch of properties for people, and I'm an investor myself. Josh Weidman is a branch manager and owner of Hard Money Bankers of Central PA, and he is a great hard money lender that you need to talk with.
So
it needs a pin. Jeremy needs a pin or something.
Listen, okay. Here's the deal, Judah. That sweater, it all depends on when you bought it.
Right.
Like if you bought that with your mom, probably goes to Goodwill. Okay. That I'm just saying.
Oh no. It's definitely. Did you find another gym, Josh? Are you working out? What are you doing?
Oh, dude, I work out every day.
I know you work out every day.
Gym. So listen, I got to tell you something. I am gravely disappointed in false advertising. I got some false advertising. Now, of course, I'm a chronic procrastinator. I knew my gym was closing for 2 weeks. And I said, you know what? I'm riding out. I'm riding it out. I like my gym. I'm not even going to look elsewhere. I'm going to pretend that it's not happening. Friday was the last gym. Over the weekend, I go looking for someplace. Well, apparently, they're the second best gym near me. They only staff the gym a couple hours a day, and all the other time it's virtual. So you can go in 24 hours a day, but guess what? I can't get a key fob 24 hours a day to get into the gym to work out. So I paid the sign-up fee. I paid the monthly fee. Whatever. It is what it is. We've got great topics today. We got some.
You have great topics today.
Taz, thanks for being here. Jeremy, Steve, everybody else that's not commenting, we want to hear your 2 cents.
Yes.
So today's topic, if you look right down at the bottom, it's where and how to invest at the top of the real estate market. Now, Judah, we've talked about this ad nauseum. Hey, we might be at the top, we might not be, right?
Yeah, it's a mature market is a more technical term for it because we might see another 5 or 7 or 10% appreciation. So technically, people call this a mature market. Sometimes when you use that word, people think you're talking about people who are 65 plus, and we talk about buying in there. So for marketing purposes, we have to call it the top of the market, even though technically this might not be the top of the market. And we just want to own that and acknowledge that and talk directly about that.
You want to hear something hilarious?
Yeah.
In 2018, I wrote a blog post on this topic saying we're probably at the top. Here's where you need to be buying.
Right.
It's hilarious, and here we are 2 years later talking about it again. So without further ado, let's jump in.
More than 2 years later, but yes. Okay.
That's right. Okay. All right. So I think it's important to put a perspective on what we're going to talk about. And I call this like a rear view perspective because I went through this cycle before, and so did you.
Yes.
You know, in fact, when I first got involved in real estate, I bought my first property in December of 2006 and invested in that deal. And then the market crashed. And I can remember talking to an experienced real estate investor, just lamenting that I missed the sweet spot. Right. I was so upset that 2006 wave was over. And now that was a declining market and all that kind of stuff. And it was really distracting. At the time I was wholesaling in, 2007, 2008, all through until about 2010. And in 2008, I was offered this property on the 2000 block of Manton Street in Philadelphia. And I can remember going into the house. It was a young college graduate who had just bought the house for $135,000. They got 100% financing on the property, or near 100% financing. And I didn't just meet with her, but I met with her and her parents at the property to talk about this thing. Okay. At the time, I mean, she hadn't lived there a year. At the time that she bought the place completely gut rehabbed. So it had new plumbing, new electrical, new roof, windows, heating system, the whole nine, kitchens, bathrooms, whatever.
The whole schmigiggle.
It's what?
The whole schmigiggle.
The whole schmigiggle, everything, right? And it was a pretty nice house, but it was a 2-bedroom property, which was common for the area. And I didn't know what the heck I was going to do with it.
Right.
And I'm doing my 70% minus construction numbers and working out my figures, and I'm coming up with like $75,000. And she's like, yeah, I owe $135. She goes, you can have the property, just make my mortgage payments.
Basically, she was setting you up for a subject to, but she didn't know enough about the terminology to actually throw that to you. And this was a bone that you missed.
Yeah, huge softball layup, like easy home run.
Whatever easy sales analogy you want to use.
That's right. So there's one other thing that you got to understand about this. This property is located in an area of Philadelphia called Point Breeze. Now, Point Breeze is a market that in 2007, 2008, in 2006, 2007, it just started getting developed.
Right.
And it was like the hot, cool new place, but rehab properties were worth $135,000. So you also had comps at 20 grand.
Right.
Right. So, all right,
it's
great.
Still very affordable, even for 2000 and, even for 2008, quote unquote, top of the market, 130. That's great.
Here's what's important about this. The reason she wanted to leave is because she heard gunshots like 3 or 4 nights over the past week. It was a very dicey area, but the important part is it's about 5 blocks from Graduate Hospital, one of the most desirable neighborhoods in the entire city of Philadelphia, right? But it's 5 blocks away. 5 blocks can be a lifetime. So I looked at it. I'm looking at the property. Rents were like $850 to $1,000 for a 2-bedroom at the time in that market. And you know what? The mortgage payment was like $800.
I was gonna say, all in your principal and interest, you're probably $500 to $600. Taxes and insurance on top of that, you're looking at $800. So you probably would have not cash flowed a whole lot when you factored in a vacancy factor or a maintenance factor, but you still would have had principal reduction. And when you're doing a subject to, you're not looking for a ton of that. Taz, we talked about at the beginning of the show. What does the top of the market mean? The top of the market means that we've seen great appreciation. We've come out of a trough, and we are now set up for the most economists agree the only way we can go from here is down. Whether we go up 5% more before going down or not, whether we stay up here for another 2 years or not, are all interesting conversations to have. But it's not like we are at a point in the market where we are going to see over the next 3 years another 20% appreciation the way we've seen over the last 3 years. That can happen, don't get me wrong, but that is it's why they play. I like even though I'm not a football player or fan, they say this is why they play the games. On any given Sunday, anything can happen. So by all means, we could see another 20% appreciation over the next 2 years. There's an 80% chance that we are going to see some pullback, some softening, some downturn in the next 2 years in the market.
Well, here's I promise you something is going to happen.
Right.
It's either going to go up, go down, or stay the same. One of those three, guaranteed.
Right.
All right. So now, right before the show, I went on and I took a look at today's numbers. Okay. If I'd have taken that property and made $50 a month in cash flow,
right,
probably would be behind for a year or two or three with so much as the cash flow, because there would have been an expense. I would have kicked out a tenant. Something would have happened, right? But today, the loan balance would have been $103,000. The median sales price for 2 bedrooms within a quarter mile of that property is $270,000.
Wow.
The tear down gut jobs are now selling for $150,000 to $160,000, and the blown out properties are selling for $440,000.
Not blown. Like the super high end. When you say blown out,
yeah, dig out basement, whatever. But $270 is a good number. The median rent rate is $1,625 a month.
Right.
So instead of making that $100 or $200, now I'd be making $1,000 a month, $800 a month.
$1,000 a month in spendable cash flow, plus appreciation, plus tax benefits, plus principal reduction.
Plus until the cows come home. Bottom line is this one opportunity, not realizing that, hey, maybe there's another way to do this. This one opportunity cost me $170,000 in equity and $600 to $800 a month conservatively on cash flow after expenses.
Right. Just think about how much money you'd have to have saved up in the bank, or even in a conservative bond fund, for it to be throwing off $1,000 a month in dividend cash flow. That would take a lot of money. If you look at the annuitized value of this property and the cash flow on it, this was a $1 million mistake, my friend.
Well, and you know what? I've made mistakes. I'd rather make this kind of $1 million mistake than the other kind where you actually have to shell out $1 million. And that's the perspective that a lot of people are coming to this conversation with. Hey, the future is uncertain. What do we do? And that's why we're having this show today. Because
Chaz, I don't think it would have been a struggle for 12 years. In 2008, it was a brand spanking new rehab. Yeah. It was cash flowing $50 to $75 a month. You would have gotten a high quality tenant in there. You wouldn't have had a whole lot of vacancy problems, even though, you're buying at the bottom fully levered. Sure. But, I do not believe that would have been a struggle or a bad thing. And that's what you do. You either put a whole lot of time, effort, and energy, a whole bunch of your brain power and sales power, and do wholesaling. You put a whole lot of sweat equity and capital at risk and do flipping, or you buy and you put a whole lot of patience and time in play and do subject to, which is kind of a combination of the two, or renting property. So there's always a trade-off. It's either I'm going to spend a lot of my time, effort, and energy and a whole lot of my skills on deal structuring, and I'm going to wholesale. I'm going to use a whole lot of somebody else's money that's I'm going to be ultimately responsible for, and possibly do some of the work myself, and I'm going to flip properties, or I'm going to buy and wait. And all three of those strategies are good. They all cost something. They all have their upsides and downsides. And, the downside here is, Chaz, you pointed out that what he would have had to do was wait 12 years to be in the situation that he's in right now. But, here's one of the things that my mentor used to say to me all the time. 12 years is going to come and go, whether Josh bought this property or not.
That's exactly right.
12 years is going to happen anyway. So so the same 12 years might as well go by with appreciating real estate.
Well, and on top of that, I would have had a struggle because at the time you didn't have a lot of young professionals flooding the area to rent these properties out. So there might have been 2 or 3 or even 5 years of a struggle where, let's say I had to spend $2,000 every year to turn over that property. right? Every year. That's $10,000 for 5 years. I'll trade off $10,000 over 5 years for 170,000 over 12 every day.
And I got to tell you, that's like worst case scenario.
Yeah, sure.
I manage 4,000 units. I got to tell you, if you put a good quality, decent person in, 9 times out of 10, they're going to leave that place broom swept. Yep. Maybe you need to paint it on the weekend. You know what I mean? If you yourself are personally cash strapped, maybe you need to do a little bit of painting. I mean, I can tell you that I had a property once, and there was something wrong underneath the kitchen sink, and I borrowed a wrench from a mentor friend of mine, took it off because they didn't have a plumber's wrench, and this was before everything ubiquitously was plastic plumbing. It still had some chrome plumbing on it, and I took it to Home Depot and said, "Hey, this is broke. There's this big hole in it. What should I do?" He's like, "Here you go. Buy this, and put it on there." And I swapped it out. Like, if you're willing to look at YouTube videos and you're willing to do a little bit of work yourself on your turnovers, properties like this do not have that big of a problem.
Okay, so that's the rear view. That is a realistic perspective of a good property in a developing market, buying at the height of the market. There is nobody in their right mind that wouldn't buy this property today for $135,000, even if there was a fire and there was no floors or roof, So so let's talk about what you can do to protect yourself so you can take advantage of those type of situations. The first thing that you got to realize going in here is that your timeline is everything. And if you have an unrealistic timeline, it will destroy you.
Yep. Here's the lesson that I learned, and write this down. This is one of these little breadcrumbs. We overestimate the effect of change in the short run, and we underestimate the effect of change in the long run.
Yeah.
I tell people right now, when they're looking at buying, $150,000 houses, I'm like, this house is going to be worth $350,000 someday, and it's going to be worth $350,000 before you think it will be. It's not going to be 30 years from now that this house is worth $350,000.
Yeah. So, all right, that's the first thing. Number one, markets are going to fluctuate. They're going to, whether you're buying a stock, a mutual fund, a bond, or you're buying a piece of real estate, things go up and down. It's just how things go. And like supply and demand, it's part of the market cycle. If you go in knowing that, stop looking at the price today.
Right.
And you look at I like the 10-year timeline, because at some point over that 10-year process, it's very likely that we're going to be at another top.
Right.
So if you look at it like that and you say, okay, oh man, that property I just bought for $250,000 is now worth $220,000. What am I going to do? Oh my goodness. It doesn't matter if you're not going to sell today.
Right.
It's like buying Apple stock in 1993 when the Macintosh came out and nobody wanted it. Right? Who cares what it's worth then?
You don't want to get taken advantage of. You don't want to do a bad deal. You don't want to buy a property and get it tied up, and you don't want to overpay for real estate. You should never overpay for real estate. But if you wait to buy $200,000 properties for $100,000 today that don't need any work, you're just that's not how you make money in real estate. It's not how you make money in this market, especially in real estate.
So, all right, if you keeping in mind timeline is key. If you're doing a fix and flip, there are a lot of people that are saying, "Hey, we can't flip anymore. There's no deals out there." And for a long time, we've had increasing values in the marketplace, and it's offset a lot of mistakes and beginner newbie, snafus, right?
Right.
In a declining market, you have to kind of tighten things up. You got to run a tight ship. So number one, work on your scope of work. Be selective of the projects that you're going to be working on. Make sure that you're choosing things that have minor renovations or cosmetic work, as opposed to the 8-month gut rehab.
Or you're working with a contractor that can get started on day one and get 2 weeks worth of work done in 2 weeks.
Right.
Now is not the time to do your first $75,000 rehab with a contractor that you've never worked with before.
That's right. Second part is your finishes. Okay, so if you've ever tried to sell a property in either a not stagnant, but like a stable market or a declining market, you know that there are more properties than there are buyers. Okay.
Right.
How do you attract buyers? Have the best looking property in the neighborhood.
Right.
Because if somebody's going to look at 3 houses that are the same size and shape and layout as yours, except yours is more beautiful and it's more attractive and it's cleaner, and you took the time to pay the cleaners to actually wipe down all the windows so the light comes in and you staged it, like those little things make all of the difference.
Yeah, I think the other thing to remember here, and where you can find a lot of this, we've only got 10 minutes left in the show, so we can't tell you everything that you should be doing here, but you can look back at blog posts and books and things like that and talk to people who were flipping in 2008, or after the real estate, kind of crash in the late 2000s, early 2000, or late 90s, early 2000s. We've seen different ups and downs in the real estate market. I look at a lot of real estate. There was a typical cottage, 3-bed, 1.5 bath, one car attached garage, 1,200 square feet property that I was, just looking at. It came up in one of my searches. And what was interesting is the sidewalk in front of the house. It was a little bit of a long yard, but the sidewalk on either side, about a foot out, they just put mulch on either side of the sidewalk, and it was fresh mulch. And I'm not a guy that goes back off for lawns or anything like that, but just the property being freshly mulched and then showing pictures being taken, it looked really good. And there being mulches a couple different places where you wouldn't normally think of there to be mulch. It made the house look a little bit better. And so there are a bunch of things you can do, and just start asking yourself and start thinking to yourself, okay, if I sell this property 3 months from now and the market's a little bit softer, I'm going to spend an extra $500 on landscaping. I'm going to spend $350 and buy a home warranty for the buyer. There are a number of little things that you can do that sure will cost you a little bit of money, but they will save you from getting beaten up to the tune of $10,000 or $15,000 by the other competition.
When you exit the property, so when you go into a rehab, let's say the best borrowers that I see, the best flippers that I see, they're in and out in 4 months. I mean, right. Settlement to settlement. That's really hard to do. Okay. In order to do that, when that happens in a declining market, especially a quickly declining market, sometimes the difference between when you start and finish the project, the value changes. And it might only be $5,000, but it might be $20,000. You have to be, number one, realistic when you're listing the property for sale. Because if you list it too high, people won't even look at it.
Right.
The second part of that is when you have more properties than you have buyers, you have to select the best buyer in the market, almost regardless of price. If you've got somebody that is pre-approved and a real pre-approval letter that it's like, yeah, we already submitted all of our tax returns and financials and everything, and we can close on the loan in 30 days or less, as opposed to the person that's got an FHA mortgage, first-time home buyer, they're going to put 3% down. They're looking for a seller's concession. They're willing to pay more. That buyer is not going to be as strong. And you may go into contract and then the deal falls apart a week before the 45-day closing ends. And now you got to start all over. Right. So choosing, being realistic and kind of dampening your expectations of, man, I got the nicest house on the property. Let's list it for $20,000 more than everything else. In a declining market, you just can't do that.
Right.
All right. So now if we got a buy and hold investment, buy and hold, the location's going to be key. You want to be in a location that is up and coming in a market. That property in Point Breeze that we looked at earlier, that's a perfect example. It's close to a really nice, stable neighborhood. And you already had some flips in the area, knowing that if you're buying a rental in that market, those flips are probably going to commence a lot more when the market starts improving. So if you buy today and you're holding it with a 10-year window, it's likely you're going to see big jumps if and when it's time to sell.
Right.
If you can't do that, make sure that the neighborhood has enough owner-occupied properties and owner-occupied buyers to be able to support your refinance when you're done with the renovations. Rehabbing wise, if you're looking at scope of work, you want to think about when I sell in the next 10 years, right? You might not have the finishes in there that you want when you're renting it, but if you think, man, it would be nice to have a half bath there, it's a heck of a lot easier to plumb that half bath with the intention of building it out in the future, or build it out and just do some basic, finishes, and then you can upgrade later. You got to make it nice and think 10 years down the line. Spend $1 more a square foot to get luxury vinyl plank instead of laminate flooring. Even though it looks pretty much the same when you move in, the turnovers and the tenants and things like that will wear on them differently.
Yeah, absolutely. Yeah, and here's I want everyone to notice how Josh and I are framing this conversation. Josh and I are framing this conversation in how you can take action.
Yeah,
and pre-assuming that people are going to be taking action, and people are going to still be buying properties, and people are going to still be moving forward. We're going to have a guest on later this week who's going to tell us about how he's done the calculations, and he feels that he's lost about $2 million because he did not take action, just steady, consistent, not going crazy action, as we were at this same cycle in the market last time. We were at 2012. We had actually already started to see or we were at 2008. There's a presidential election. There was talk of, being at the top of the market, and it kind of took his foot off the gas. Daryl had been investing for about 5 years at that point. Thought that he was smart enough to see and know what was going on, and decided to decided not to take action. Yeah, exactly, Steve. You're making a joke here. Don't presume, don't assume, don't assume it just makes an ass out of you and me. So yeah, I think that it's very important that we assume that we are going to be taking action. I think it's very important that we assume that we're going to be making good decisions as we take action. And what we are trying to do is prepare people for what and how they should be making those decisions if you're flipping or if you're looking to buy and hold. The other thing to consider right now, by the way, ladies and gentlemen, is because we're in a mature market, now might be a time for you to sell. Now might be a time for you to do what they say in the stock market, equity, profit taking. They see the market. Sometimes you see the stock market go up for 3 or 4 days in a row, and then it dips a little bit. Well, yeah, the reason it dipped is because people sell to pull their money off the table. They bought $100 worth of stock, and now it's worth $130, and so they sell their $130 worth of stock so that they can take their profit, or they sell the 30, and so you can kind of see some. You kind of see a little bit of a dip. So right now is an okay time to take profits. Right now is an okay time to list properties for sale. If you don't think I want to own this property for the next 10 years, you might want to go ahead and list it now.
Right. Last point of contention here, whether you're buying a flip, a rental, or whatever, now's the time to make sure that you have a solid plan B when it comes to exiting the property. If you're doing a fix and flip project, what happens if the property doesn't sell? Is it going to cash flow? Or the rents will they justify a refi? And, can you sell it with owner financing, or like a subject to, or rent to own type situation? Are these, you got to keep that in the back of your mind. For the rental properties, do you have a private investor that would take a 5 or 10 year note? If you can't refi the money out of it, do you have somebody that might take a 6 or 7% mortgage on the place for the next 8 years because you can't refi it at the numbers you need to? Or can you afford to keep your cash in that property? Let's say that the refi rates go from 80% to 65%. Worst case scenario. Can you afford to keep that extra 15% in the property? And if you can't, okay, what's your backup plan?
Yeah, we got to do the math on that sometime, because I got to tell you, keeping an extra 10 or 15% in the property is a great way to have your money invested. And we got to actually do that live here. The only other thing that I'll say here before we wrap up the show is about, a plan B is know when you're going to make that decision, right? So if your decision is, okay, I am going to post this property on Facebook for a week and see if I can get anybody to buy it.
Yep.
I'm moving to plan B and I'm calling Judah to list this property for me after a week.
Yeah.
Don't make the mistake I made. I can tell you, I can drive you right to the property right now where I lost $20,000 because I totally missed the market. The market was changing. I didn't want to believe that the market was changing. And I spent about a month and a half diddling and saying, well, it was a holiday weekend. Maybe people weren't looking because it was a holiday weekend. The weather wasn't that good this past weekend. I'm going to try and sell myself for just another weekend before I list it with the realtor. I just kept coming up with excuses. I knew what my plan B was, but I didn't actually move to it. And not moving to plan B when you should is the same thing as not having a plan B at all.
That's right. Well, and beyond that, Judah, you made a really good point here. I don't know if you've seen this more and more, but there's a lot more FSBOs right now.
Yep.
Surprise, surprise. The market's really hot. Things are flying off the market. People think that they can just list the property themselves. And maybe you can. But what I've noticed is there have been a handful of properties that I've been watching that sat on the market as for sale by owners for a month, then 2 months, then 3 months, and then they drop the price. And they still stay on the market as FSBOs. And now, a year later, these people have hired an agent, forced them to list it at too high a number with no new pictures, nothing. Right. Now, and like, there's a reason that agents are experts and get the highest prices, and it's not just the MLS. Right. Anyway, okay, so November 2nd, we are having a 5-day challenge. If you have, look, if you are thinking about taking advantage of this market, it is a hot market right now. Whether you are buying buy and holds, whether you're looking at wholesaling deals, whether you're looking at fix and flip, it's hot. And there are a lot of people out there that need to sell for cash, for an all cash offer. They need to sell to a private listing because they don't want a parade of people through their house. They've got a little bit of a different situation that doesn't quite fit a conforming, retail market. We're going to be doing a 5-day challenge for free, right? Starting on November 2nd. We're calling it Flipping Houses Without Cash, Credit, or Criminal Behavior. I hope you'll enjoy it and join us. You can check that out at buildandgrowwithrealestate.com, and we'd love to have you on there.
Yeah, absolutely. Josh and I are looking at more and more ways of delivering content to people. This is going to be a more focused way of doing that. So it's also going to allow for more collaboration amongst everybody. If you go to buildandgrowwithrealestate.com, you'll be prompted to enter your email. And then what we will email you is a private invite to join our private Facebook. And all of the modules for this class are going to happen in that private Facebook group. So it's easier to share documents in a private Facebook group. It's easier for people to talk amongst themselves, or maybe they wouldn't feel comfortable or want to talk here on our show because, a bad show, we get 250 to 400 views. Good shows get 1,400 people who watch them. We understand that that's a little bit intimidating for some people and who don't want to speak in front of a 1,400 people audience. So this show is going to offer a little bit more, this Facebook challenge is going to offer a little bit more intimacy. And Josh and I are probably going to continue to deliver content like this. So we would love for you guys to be here for our first one. And then also tell us what we did right, what we did wrong, and what we need to improve. So that's very valuable information to us. So come to the buildandgrowwithrealestate.com, buildandgrowwithrealestate.com, all spelled out, and register for our upcoming 5-day Facebook challenge.
That's it. All the info we got for today. Thank you guys so much for joining us. I really appreciate the love. If you enjoyed the show, excuse me, make sure you like and share. And until tomorrow, you guys go make some money, right?
Have a great day, everybody.
See ya.